Is this a buy the dip opportunity? Well, we're going to address that in today's show. You can see the market is pulling back and altcoins are getting absolutely annihilated against Bitcoin. So the Bitcoin dominance is continuing on up. And okay, are we back?
Should be. We just can wait for it to run on YouTube.
Okay, guys, we might be back. Just give us a second. We're just rebooting everything. Let's see.
Yeah, we look good.
Okay, is everything good to go? We're starting from where? From the very beginning. I'll just quickly update you since we're probably going to have to cut that part out of the stream. So we are going to have a look today at what happens with the CPI month-on-month, year-on-year inflation data. That's, of course, going to drive markets ultimately. Anything that comes in better than expected, and you can expect that the market is going to rally off that. Otherwise, what's going on right now with the current pullback, which you can see, is essentially just the market pricing in what's going to happen with the CPI inflation data, and obviously de-risking slightly going into that event. So if you look over here at the CME tool, the Fed Watch tool over here, there's a 69.2% probability at the moment being priced in for a 25 basis point rate hike. And if you take a look here at what Joe says, 𝗕𝗏𝗄𝗧, he says that the equities do not rally when the Fed cuts their rates. They actually end up puking. And this is something I outlined already in the previous streams over a year ago, I think already, where we said that when the Fed does pivot completely and they cut rates entirely off the table, no more rate hikes anymore, then usually it marks exactly 1 month after that there is a major sell-off within the markets. And he says, yeah, the Fed cut rates in response to 3 different things: a credit event, financial plumbing dysfunction, and economic labor market deterioration. And he says these are not bullish. The risk on rally actually happens before the cuts happen. So in line with what I just said to you, when the hikes happen to stop. And here you can see it if you look at this over here. Once they go from into a rate cut, usually that leads to a major fall off. So what does that mean for Bitcoin? Well, currently we're playing this as a major relief rally. We have been all the way since almost the low, since the early $19,000 region, all the way up. And we're using the Gaussian channel over here on the weekly chart, which suggests that because we had the closes, first we had the big massive candle which pushed straight into the 𝗪𝗶𝘆𝗽𝗍 or into the middle band of the Gaussian channel. That consolidation created a massive bull flag, which led to what's the start of a breakout now. So this breakout you would expect would go further, but at the very least on the lower end, you'd be looking at this top side to get tested, which is about 31,965. You'd then expect a little bit of a pause within that region, and then potentially if it continues to hold and create pressure against that zone, then it might push on up to the upside. 4-day chart, prices above the short, the medium, and the long-term moving average. All of that is looking good, and the breakout is still looking real. Currently, yes, price is pulling back, but so far it's not major cause for concern yet on the high time frames. Okay, S&P 500, the futures chart over here, you can see the major range that price is stuck within. Still the same thing. We're waiting for a reaction either off the top side of the range over here, whereby it might push in there solidly or a little bit above, and then we'll see what happens next. Is it going to hold that as support or reject? Because this has been a range that we've been in for a long period of time, ever since April of 2022. So it's almost an entire year that we've been stuck within that range. Big range over there. And then that lines up with what you're seeing with Bitcoin dominance as well, which has also been stuck within a range for at least a year. So he says here, Bitcoin dominance just broke out of a year-long resistance on a weekly scale. I think that alt season will not start until at least 57% on the Bitcoin dominance. So let's take a look at it. Here is the Bitcoin dominance chart up here, and you can't deny it. It's been in a range all the way since May of 2021 is when that range began, and we are slowly starting to peak through the top here. Now you're going to need a couple more weeks in order to confirm this, or at least a week or two, I would say, to confirm what's actually going on over here, because this is just the start of the breakout. It could end up being that it closes as a wick like that and comes straight back into the range. And when it comes to ranges, I mentioned this yesterday, these ranges they tend to continue as ranges until solidly solidly broken out of. And therefore, I think that there is still a chance that it could fall back into the range, but you don't want to front run on altcoins. Rather, let alts run, bounce properly, wait for the 𝗬𝗍𝗫𝗍 chart to fully reverse, and then that would be an opportunity for you to time your entry, because if this does hold up here and continue on up, then 57% is still a long way away. That's going to absolutely crush the altcoins. Okay, the dollar still looking at the same plan over here. We can't act on this until a major level is taken out, and so far it's in the middle of no man's land, so nothing really going on with the dollar. But I expect some sort of resolution from all of these charts based off of today's potential CPI catalyst, which could move the markets. Okay, same thing as the Bitcoin dominance, what I mentioned over here. You can see the range that it's been stuck within. Let's quickly grab a tool. So you can see the range that the total has been stuck within, very, very similar to the Bitcoin dominance over here. You even have the same trend line, which looks just like what I showed you on the Bitcoin dominance, and we're showing signs of breaking out at the moment. But again, similar to Bitcoin dominance, you need to wait for confirmations over here. You need to wait for closing candles to hold above here, and then your next target goes all the way up to that 1.32 trillion. If not, then it's going to be a deviation. You're going to come back into the range, and then of course the market is going to sell off still quite a bit more. If total comes down to these levels, where does Bitcoin go? Bitcoin could potentially come down anywhere between about $22,000 and $25,000 if total gets to this region over here. So do keep that in the back of your mind. But there is something very, very bullish that's going on at the moment. You do have, at the moment, a bull flag, which is currently breaking out. And you can't deny it. It looks exactly like it does in a textbook. I mean, pull out a textbook or just Google what a bull flag looks like. You have your pole, your measured move would go from here to here. It ran the perfect flag, complete 90-degree angle over here. There isn't any doubt about it. And now you've started to break out. You have a confirmation of the breakout because the first candle peaked out above the flag. The second candle then closed above, which means that your breakout is now confirmed on this, and the ultimate target is much, much higher. You'd technically be looking at a $36,000 to $37,000 Bitcoin price in the coming weeks. But remember, when it comes to these breakout techniques, or if you look at these types of charting patterns and look at breakouts, if they fail, something very, very important that you have to remember is that when they fail, because they do fail, the reversal move off that is very, very aggressive to the downside, and that would then start to look like full distribution, right? Remember the Bart-Simpson pattern. So if you put his eyes over there in his face, that would be an example of a Bart-Simpson pattern if it were to fail. And the reason why they're so aggressive to the downside is because a lot of people are looking at this and playing the pattern to the upside as a breakout, which means you have a whole conglomerate of stop losses over here, and this just adds additional pressure if you do break through. The other negative thing, which is noteworthy to look at the moment, is if you look at the volume, which has been declining, right? So the volume has been declining. Look, this is what you'd expect. This type of volume led to this up move. Perfectly normal, nothing wrong with that. You had a consolidation phase. Volume starts to come down, which is also still fine because you're consolidating, nothing major. But now when this breakout has started to begin, as you're seeing over here, you want to see volume start to break through this downtrending trend line over here. So volume needs to start picking up and picking up aggressively if this is going to play true. If you see this, if you see price continuing on up for the next day or two, but volume continues to decrease, then that would definitely be a big warning sign for you that possibly something different is happening and big players are loading off their positions. That's very similar to if you look at the divergences within the market. If there is a divergence, then you would expect the same thing, right? That big players are loading off their positions, and that's why price is going up, but momentum is slowly weaning off. Okay, let's look over here. Should those higher targets come into play, then this is kind of what I'd be looking at. So we're still looking at this gray box zone. Remember, I initially said that we're either gonna push into the gray box and deviate from here, or it's going to be from here. So if we continue to hold and the breakout continues, then where I'd be looking for this move to start to slow down is possibly when it gets into this area. This is for now for the shorter time frame traders. If it pushes into this $32,000, $33,000 region, I would then start to look to see if there's going to be a swing failure pattern back into this region over here. Then I'd go short with a stop above, and then you're looking to target it all the way back down into the range, anywhere between TP1 at 28,300 and TP2 at the bottom of the range, which is the prior range high coming in at $25,000. So that's more or less what I'm watching for the time being. Not much has changed based off of yesterday's analysis. But one interesting thing that I saw is from 𝗍𝗲. 𝗍𝗲's a very good trader. He trades with serious size over here, and he says there's been a lot of ink spilled about what effect the supply of the Shanghai upgrade, which is coming up, I think it's around about in a couple of hours. It's today, should be about 12 to 14 hours from now. He says, he says what the effect of the supply of the Shanghai upgrade will have on ETH. Most are missing one key component, which is the sentiment around ETH heading into the supply unlocks. Crypto markets prove time after time that sentiment and positioning are what matter. And he says, so for example, the unrelated fact that Bitcoin has rallied aggressively into the Shanghai and ETH BTC ratio has consequently collapsed back into the range makes the event even more bearish than if BTC had just stayed in a range and ETH BTC was trading at 0.066 or so. But he says, I have a plan for scaling into ETH BTC based on this, and I can't share everything so easily. So essentially what he's saying is he's looking for a long on Ethereum against Bitcoin. So basically, how do you long ETH BTC? Well, you go long Ethereum, right? Simple as that. It's something, I know it seems crazy to say that, but it's something that confused me a lot when I started trading. Everyone spoke of ETH BTC, XRP, BTC, and I was like, well, where do you find these ETH BTC charts? If you go long on ETH BTC, it just means that you're going long on Ethereum and you're not going to long Bitcoin because you think Ethereum is going to outperform Bitcoin. So let's take a look at the chart over here. I ran something very, very simple over here. I just ran a parallel channel, and you can see the way that this works out over here. If you look, one level of confidence that I have, obviously price is currently coming down. It's nuking at the moment. You can see a parallel channel which comes all the way from Jan of 2020, and it matches up with these lows. This also matches up on the high end where you had those major pivot points, and then look at the middle of the parallel channel, how sticky that was within these wicks over here that came into that zone. So it's something that could potentially fit as a potential support zone. Matching that up as well, you do have a horizontal which comes into play over here. So if ETH BTC continues to go down over the course of the coming days, then potentially that could be an opportunity to scale in. That means it's another 11-12% move down, which in one day is not unreasonable, right? If of course, if the market starts to sell off and the Shanghai upgrade, the guys that are unstaking start to dump their ETH, then is it possible that it could move down 12% against Bitcoin over the coming days? Of course, that's very possible. This is one area of interest that I would have. That means that you'd be looking at 0.0557 as a potential area where maybe there's a possibility that things start to catch a bit over here, and then you look at some sort of accumulation phase and then reverse. Because 𝗍𝗲 didn't say when he's looking at this how he plans on scaling in, and he didn't say how long he plans on scaling in over, but maybe, just maybe, this could be a potential zone. So that's something we'll keep our eye on over the coming days and weeks. That's something of interest. Next, let's look at the daily pivot level. At the moment today, the daily pivot level is up at 29,557. What does that mean? That means as long as Bitcoin holds above 29,557 on the daily chart, then you would expect that there could still be pressure to the upside and the move is not completely over yet. Get below that level, it means that you take out yesterday's low, which would obviously be a bad sign, and then momentum starts to shift back towards the downside, and then we start to look for areas where you could potentially buy the dip at a later stage. If you look over here as well, the funding rate still very positive, a lot of longs that are in the market, and eventually those guys will get tested and taken out. All right, let's have a look here at the cumulative volume deltas on the spot, which is the orange one on the top. And then you have the leverage traders, which is the futures traders on the bottom, and the white one. So everything looks relatively normal over here. No major divergences or anything. Sorry, guys. James is, you know, sometimes he gets very excited, puts his volume up here. All right, so that's continuing on up. Spot is still pushing price up. The leverage traders who were shorting are starting to flip onto the long side, and this can continue on up still a lot longer. Open interest is not that high yet. I think it could still get a lot more heated before obviously that comes back down. Okay, looking at the volatility is still continuing on up. So this can reach all the way up into the hundreds region. You would expect that would need to happen if that bull flag scenario were to actually play out and Bitcoin were to get to $36,000. Then you would expect that this volatility will continue on up to much higher levels. Okay, low time frame, hourly chart over here that I have on Bitcoin. So currently looking at the ranges between the Monday low, Monday high, that was the main range where we had this big pump that came up into this region. Look, as long as we're holding above that level, then I still think there is an opportunity that price can continue on up. As soon as you take out the Monday high, I'll be looking for low prices. My first area of interest is going to be the Monday mid-range, which is coming in at $29,000. That would be a potential dip buying opportunity if you see something like that. And then obviously it needs to bounce pretty quick. The alternative is if there's a very fast spike down into this order block area. So this area which is coming in around 28,500, but this would need to happen super quick, because remember guys, it depends on how price gets to a certain level as well. It's not only what level does it hit, but the question is how did it get to that level. So what I mean, if price rolls over and it slowly starts grinding towards these levels, that's going to be incredibly bearish. You wouldn't expect a major bounce off of this zone, right? But if price happened to fall quickly, the quicker it comes down into these demand zones, the quicker I would expect the bounce, reclaim the Monday mid-range, and then obviously it can continue on up. So at the moment, I'd be positioned looking for an opportunity to buy the dip because you can expect volatility will be imminent. It's just a question of, do you come down to the Monday mid-range and then reclaim, or do you come all the way down into this box over here at 28.5 and then reclaim? So that's kind of what I'm watching for on the low time frames, and I'll try and create a trigger plan today for you guys. Now, it's very important that price bounces quick, because if it doesn't, you have the potential that this power of 3 would play out, right? Remember, we spoke about this yesterday. We said that you have this phase over here, which is essentially consolidation, right? Price consolidates, then it gets manipulated into a higher region like that, and then you have a swing failure pattern, and then you get full distribution all the way back down, and we're still waiting to see, is this going to be a prior resistance into support flip? So SR flip over here at the $25,500 level. Well, if it comes all the way down there, I'll be a buyer over here. But I first want to take an attempt, at least somewhere around here, if price gets into that 50 EMA on the 4-hour chart, which is in line with those levels I just showed you, right? If you look at the 50 EMA, it's coming in around that 28,800. So that's exactly what I just showed you around this Monday mid-range level. So, and it depends how it gets there. If it comes quick, right? If it comes quick, that will quickly create another high low, and then there could be an opportunity for one more push higher. All right, let's quickly see, is there any questions over here? They're asking, is the show pre-recorded? It's not pre-recorded. James just messed everything up over here. Blame James, the sound guy. He gets really upset if you call him the sound guy. But no, guys, we're testing out the new streaming system again. Remember, watch this on 4K because it's high quality streaming content, and sometimes it does give issues over here. All right, guys, I think that brings us towards the end. Please make sure that you smash the like button, hit the bell notification, and subscribe to the channel. We do apologize for the 1 or 2 glitches that took place. And let's see what happens with the CPI later today. I'll see you all on tomorrow's show. And that's it from me. Cheers for now.